China's renminbi currency has depreciated by about 3% over the last 2 days, following the actions of the People's Bank of China to introduce more flexibility into its exchange rate mechanism. With me to discuss the motivations of the Chinese authorities and their implications is Izabella Kaminska of FT Alphaville. Welcome, Izabella. What's your sense of why the People's Bank of China was intending to introduce this flexibility?
Well, I think what's really telling is that if it is about flexibility and meeting the requirements of the IMF to join the SDR basket, is that when flexibility is introduced, the currency has a tendency to depreciate, not to appreciate. So that goes very much contrary to the public, perception that the currency is either undervalued or at best fair value. It seems to imply it was actually overvalued. So the question is, why is that?
And do you think then that it's possible that the renminbi could depreciate further in days to come? And how does China's capital outflows play into this whole picture? We all know that there's been very significant capital outflows from China over the last 3 or 4 quarters. What does that tend to suggest about the renminbi in the future?
Well, it suggests that in reality there is a bit of a liquidity mismatch in the Chinese system. China has a lot of US reserves, we know that, but they sit in USTs and they're kind of locked up in long-term capital. It doesn't necessarily have access to dollar liquidity, like liquidity today, the sort that can pay off, say, obligations to creditors or the sort that can pay for goods in the international market. And that's the mismatch we're worrying about. Because of the trade, the trade figures coming in weak and generally the economy is suffering more than it has been in the last few years, we don't have those dollar inflows to support their liabilities. That creates a bit of a problem for the valuation. And if you know that your RMB store of wealth is going to devalue because it's not sustainable, chances are you're going to try and escape with that capital to somewhere where it can be reinvested in assets that will hold their value better, like London property or all sorts of different external investments.
And going back to the initial motivation of the People's Bank of China in expanding the trading range of the renminbi, you mentioned it was an attempt to join the International Monetary Fund's special drawing rights basket, a basket of currency, somewhat synthetic, at the IMF, which tends to confer on its members a status as a reserve currency. But why does China want the renminbi to become a reserve currency? What's all this SDR issue about?
Well, there are both benefits and sort of burdens associated with being a reserve currency. From the US perspective, being the dollar reserve currency is an exorbitant privilege, as they say. But at the same time, you are accountable for all those dollar claims that are circulating through the system. And if there's a rush on your own market, there can be inflationary consequences. So sharing that burden is what the international community actually really wants. And I think really what we're missing is it's not so much China that wants to join the SDR as the international community wants to accept it, because there's so much trade going through with China. And if it can be done on terms that actually allow China to have skin in the game when it comes to being accountable for all that flow, that is a benefit for the system as a whole, and it also helps out the US and other reserve currencies, because then they don't have to be responsible for, say, bilateral relations between China and different, where the dollar is, say, being used for settlement instead.
And at the end of this year, I think it's November, the IMF is due to hold this meeting to decide whether or not to allow the renminbi into the SDR basket. Do you think it's likely that the renminbi will be accepted?
Well, the IMF criteria are that it has to be a certain quota of world trade has to be going on with that country in particular that would join, but also that the currency itself is so-called freely usable. Now, that doesn't necessarily mean that it's flexible in the sense that it's freely floated, but that people in the market are using it to settle trade, so that when you buy, say, oil on the market, you're not just using USD, you're also using RMB. That's where it's failing. So I think the concerns the IMF have are that it's not yet the sort of the go-to currency for settling trade between, say, the US and China as much as they would like it to be.
Thank you very much, Izabella.